The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. Just making sure I had my mic on. Got a little bit of allergies, even a little bit of an allergy flare-up right as I was coming on the air. Had about 6 or 7 sneezes a couple minutes prior to going live. My eyes are a little watery, but we'll get over it. I'll battle back, and we'll jump into this market as we get some PPI numbers this morning. We're trading higher by about 17 points right now at 45.24 on the S&Ps. Pretty much an acceleration overnight. You see the volatility on those PPI numbers today, 30. We'll get over those in a moment, but somewhat encouraging following especially the CPI report from yesterday. What do we got? We got lower yields. We got a dollar index below 100. I was referencing yesterday that I got an exchange rate of 110 when sending one of my friends dollars, 4 euros in September when I'll be going away for a wedding for a week in September. And I was joking that 110, man, we're already at 112. Just like that in the euro, you got the dollar index. And look at the run, right? Look at this run this dollar index is having, man. And that is weaker in terms of this is the euro dollar. That's euro strength up to 112 right there. You jump over to the dollar index. And yeah, is that right? I thought we had a 90. I thought we had broken the 100. Looks like we're right to that level right now with the dollar index at 115. And yeah, we got moves across the board, continuing kind of the action we had yesterday. Look at the higher price. We got the 10-year right now up by about 10 ticks. You're talking about a yield of 3.82% in the 10-year. So much for 4%, right? Look at this acceleration, man. Just in the last 4 or 5 days, we're up by 2 full points from where we were trading at on Monday. On Monday, remarkable. Up 2 full points from where we were at on Monday, let alone Thursday and Friday. ADP spiking it all the way to 110.05 when we had high yield. You jump over to the 2-year. Excuse me. The 2-year catching a lift to 102.02. You're talking about a 2-year yield right now, 4.66%. 4.66%. Now, some perspective there as you see where we were. Let's back it up even to last Thursday. Last Thursday, on that ADP number, you had the 2-year, talked about it yesterday, but worth mentioning, man, it is quite a difference a week can make, as that went from 5.1% to 4.66%, a radical decrease when you think about on such a short-term perspective, almost half a point. Did you get that? Almost half a point. Remarkable. Moving the 2-year. We jump over to the VIX this morning. 1338. We might get a 12 handle, man, depending on how the day goes. 1338 as this market just continues to climb higher. We're over a lot of the economic data, at least for June, and we are coming into earnings season, though. Going to be interesting to see how that plays, for sure. We jump over to crude. Check out some of the commodities this morning. Crude catches a 76 handle briefly. We're back a bit to 75.48. You jump over to the gold contract. Gold spike into 1963. Now, remember, when you have a weaker dollar, okay, going from 103.52 a week ago to 100, that's a mammoth move in the dollar index. Over that same period of time, you've had the euro-US dollar go from 108 to 112. Again, mammoth move, of course. What's that going to do? You're going to have a weak dollar. That's going to put a little bit of a bid in commodities. You have gold over that time going from 1910 to 1963 this morning. And it's going to help crude along with the market helping crude in terms of demand, growth, etc. Crude, though, was at about $70 following that number. We're trading at $75.50. A slow incline, but higher highs, higher lows on the price of crude at $75.51. Excuse me. Yeah, it was quite an allergy attack. I was filling up my coffee right before the program, and I don't know what's going on this time of the year right now. I am getting some allergies on a pretty consistent basis, and it doesn't usually happen that time. So, yeah, they're getting me somehow, no matter what. But yeah, I had quite a little sneezing fit getting ready for my I'm not too young for hammer time, Dan, don't worry. Yeah, I know you're talking to Jacob, but man. All right, let's jump into it. Let's jump around to the PPI and take a look. PPI, wholesale prices, less than expected in another encouraging inflation report. That's how CNBC puts it this morning. The number, 0.1%. That's the final demand, rising 0.1%. Market was looking for 0.2%, and it rose 0.1% when excluding food, energy, and trade services. Producer prices come after the CPI. It was 3% year over year. We're talking about a number that's near 4%, 4.8, 4.8% year over year on the core side. So they're lofty numbers and pretty interesting, this whole conversation, right? The way yields are moving. And meanwhile, the market says that we're locked into a hike after a pause. If we were pausing for data, and this is the so perplexing thing, right? If we were pausing for data, if the Fed was pausing to allow data, why wouldn't they pause again? I mean, I know we get, an unemployment rate of 3.6%, right? We have wage growth. We have core CPI year over year still approaching 5%, okay? But when you look at what the Fed said they were going to look at, I just wonder if anything shifts. We're going into a quiet period. It would be very hard to shift, but in my own head, it was very hard to understand why they were going to pause when the data didn't seem like it was quite there yet. We've gotten some pretty encouraging data points the last couple of days. We got non-farm payrolls that had less than 100,000 jobs net added. It seems like the data lined up where they could pause again, but the market doesn't think so right now. But pay attention to yields, man, because it'd be remarkable if things dramatically shifted in the next 2 weeks and yields just took off and forced the Fed's hand. Not saying that's going to happen, but there are some mammoth moves going on, especially the 2-year. Because you don't see these types of moves on the 2-year in terms of that type of a rise. You take a look at the daily, right? This acceleration into the ADP print was what originally had everybody forecasting that we were going to hike twice. And that was when you got a lot of Fed speak in the same way. But we've reversed it all on the 2-year, which is remarkable over that time. All right, let's take a look at some of the FANG stocks. Excuse me, folks. Apple shares going to be up a bit. You're trading at almost 191 for Apple. Let's put it on a 5-minute. There's your action yesterday, back near the highs of the open yesterday, and almost 191 for Apple shares. You got Amazon. Did you get some Prime goods? Amazon's going to pop, man. I got some Prime goods. I did. Couldn't help it. Tempting last night. On there last night. Bought a few things. People in the house buying a few things. Haven't seen any of the numbers yet, but I'll take a look at them. I'm sure they'll be cherry picking some big numbers that they'll be talking about this morning. But Amazon pushing 134. Talk about Amazon, man, right? You're up from $80 at the beginning of the year. Remarkable acceleration for some of these equities as they continue to push higher. Now, Amazon's got an all-time high up here of 188, okay? So you're still only pushing about to the 50% of that entire retracement from 188 down to a low of $81 to start the year. Absolutely remarkable how the start of the year was literally the cherry pick low. I mean, the yearly numbers that we're talking about, man, they are mammoth. The NASDAQ 100 from 16,700, you trade down, 6,000 points, and we've gotten 5,000 points back. And we've gotten them all back this year. Percentages are amazing. We'll do the percentages, man. What are we up right now in the NASDAQ 100? Bonkers numbers. Stay tuned, folks. We'll be coming back talking to our man Kevin Hinks from TD Ameritrade Network, Fast Market. We'll be back in 3 minutes. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up about 17 points right now. NASDAQ 100, you're up 115 points. That's about 0.75%. NASDAQ 100, man, I think you're talking something like 40% this year that it is up. Remarkable acceleration, and it continues. To talk about some of the action this morning, let's jump over to our man Kevin Hinks. Every trading day, folks, 12 noon Eastern time from the TD Ameritrade Network Fast Market with your host Kevin Hinks, Tom White. They have an outstanding lineup of guests. They walk you through hypothetical trade setups every single show. They're usually going through 3 different trades, all of them using options, all of them hypothetical trades. Great way to learn. And let's jump into it this morning. Kevin Hinks, this market is relentless, man. Good morning.
Good morning, Tommy O'Brien. Well, we've made it to second quarter earnings season, Tommy, but some of the data that we've gotten this week in terms of inflation, you know, I'm a big fan, I'm a big proponent of news flow and the flow in the market. And right now, Tommy, there just doesn't seem like there's anything to get in the way of this market. Now, that may lead to some fatigue down the road here. And these markets aren't screaming today like they did yesterday, but a grinding market, you know, usually starts slow and ends, you know, somewhere much further down the road. But so when I look at the data that we got today, again, big drops in year over year headline. Yesterday it was CPI, today PPI. The other numbers all down, you know, lower than expected in the year over year. On the ex-food and energy, the core, it's 2.4%. Ex-food and energy trade services, 2.6%. You've got jobless claims that are fairly low. You've got good earnings out of Delta and PepsiCo. You've got good news out of Disney this morning. A lot of beat-up names. So, Tommy, like I said, other than some crude oil prices that are starting to reach some higher levels, there's not a lot to get in the way of this market, Tommy.
It was a great summation, man. It's just remarkable to see it happening every single day. And I agree, the headlines, it's nonstop, and they're pretty encouraging headlines in terms of some real numbers on inflation front. You break it down. I was reading the articles yesterday, Kevin. You know, if we compared our CPI to the way they compare it in Europe, right, where you strip out one of the major components, owner's equivalent rent, which a lot of people, of course, it's a hypothetical that you're not paying. That brings us down to numbers that are approaching almost 2 to 3%. So remarkable in terms of the numbers that we have. What do you think of yields? We've had the 2-year with a dramatic reversal, the 10-year as well. Of course, we have lower yields coming off the numbers that look like maybe the Fed's not going to have to go as hard. And what I find so interesting, Kevin, all of this happening less than 2 weeks ahead of when the Fed now is expected to hike again. We have yields lowering, and it looks like inflation is taming, and that's after a pause. What do you think of yields? Are they sending us, could that next meeting be up in the air, you think? Is that where yields are going, or is it just a reversal of the meetings after that, possibly?
You know, Tommy, I think that the weakness in the U.S. dollar is a product of the perception in the markets that the U.S. is closer to being done raising rates than the rest of the world is. And that hawkish pressure on the rest of the world, saw the Bank of Canada raise rates yesterday. The one interesting fact about the U.S. dollar and currencies in general is it's a relationship trade. So their currencies are rallying, ours are weakening, and that, another thing, favors U.S. stocks. Tommy, if I'm looking at this without reading any news today, and I'm looking at the overall markets, I'm looking at lower yields, I'm looking at the lower U.S. dollar, and that favors stocks with no real significant pickup in crude oil prices. So when I look at those three, it favors stocks, Tommy.
And the market would agree, man, as it marches higher. Green across the board yet again. We commit to some bank earnings, kicking things off tomorrow. I can't believe we're already into earnings season just that quick, man. Banks kick it off tomorrow. Do you guys have some equities chosen that you'll be talking about on Fast Market coming up at 12 today, Kevin?
Yes. And like Folio is going to do a presentation on NVIDIA, kind of a high-profile name going into earnings. They're going to give us like Folio-type data and information on NVIDIA. That's the middle segment. But around that, we'll trade J.P. Morgan, we'll trade Wells Fargo on today's show. So we'll dive right into the banks in the middle, in the end segments, and look at NVIDIA in the middle, Tommy. So a nice full show today.
Nice. And as I pull up those charts, NVIDIA, of course, we know pushing almost even all-time highs even yesterday. And then J.P. Morgan, you're right up there as well. And then Wells Fargo, a little bit of a different story, though, right? At $43 from $48, they were all the way down to $35 on the banking crisis lows. Pretty remarkable, Kevin, that we had those banking crisis woes. We lasted about 3 or 4 days. What do you think about that being the turnaround bottom? Was that the stress that this market had? Because you look at the charts, and it's absolutely remarkable if you go back to the conversation everyone happened, the media, right, banks failing, et cetera. Boy, it was like a 3-day pullback, and then we haven't even looked back, man, from 3,900 up to 45.24. What do you think about that being kind of the pendulum that things swung from after a few days of banking crisis in early March?
Well, here's what my take on the banking problems were, that everyone just assumed that it was a contagion and banks were all going to fail. When the reality is a couple banks very, very poorly managed their bond risk. And so that led to their problems. Not that, every bank that bought bonds had some exposure, but if you don't have to sell them out, you can hold them to maturity, they're not going to hurt you. But some banks couldn't do that, and they poorly managed their overall bond portfolio risk, Tommy, as you and I talked about in the past. So it wasn't a bank contagion. There wasn't a systemic banking issue. It was just a few poorly run banks. And so the market recovered from that pretty quickly, Tommy.
I was punching in some numbers as you were talking there, going over it, and it's remarkable, Kevin. S&Ps from kind of those March lows, just ballparking it, up 15%. NASDAQ up about 30%. NASDAQ 100, that is. And that, of course, includes one of the stocks you guys will be talking about, NVIDIA, coming up at 12. Kevin, we appreciate the time on a busy morning, as always. We'll be watching at noon today. We don't talk to you on Fridays. We'll talk to you on Tuesday, man.
Have a great weekend, Tommy.
You have a great one as well. Folks, check it out. You heard it. They're going to kick things off with some banks. They'll be talking J.P. Morgan. They'll be talking Wells Fargo. And they'll be talking NVIDIA, man. And, yeah, some of these numbers, man, right? Bonkers numbers in terms of what you're up. So check that out. You just go from 12,000 to 15,500. You take anywhere that March low. You were down there on March 1st. You were back down near that area. And I'm not taking the cherry pick low, which looks to be about 11.8, 11,795. I'm just taking 12,000. Up to about 3550, up to 15,550, which would be a 3,500 point run. in that index. And yeah, you are talking about 29.65%, about 30%. Now the S&Ps went from 3,900 to about 4,500. That's 15%. The NASDAQ 100 this year alone, okay, is up 4,500 points from about 11,000 where it kicked off the year. That is a 41% acceleration in less than just barely over half the year. 41%. The NASDAQ 100 is up right now, and we're not even at all-time highs, right? But keep that in context. We've talked about it. Companies like Apple adding $1 trillion in equity this year alone. Apple shares, though, they're going to open at 191, and Kevin laid out well, folks. Not much to get in the way of this market right now. Yeah, pay attention to yields, pay attention to the dollar. The market loves it. We're at 45.25 right now. We'll be coming back for the open, folks. Stay tuned. Don't go away.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You open right near pre-market session highs. You're up 17 points right now, trading at 45.24 in the S&Ps. And yeah, you look at where we are. You look at some of the percentages this market has ran. A stone's throw away from the all-time highs of 48.08, man. You were down to 3,600 back there in October. It's been quite a run, even from March, as I mentioned. You back it up to the NASDAQ 100. how remarkable would it be if the NASDAQ 100 made all-time highs before the S&P? But it looks like that's what the case is going to be if it happens, man, because the NASDAQ 100 is the strongest one out there. AI, the run may not be over just yet, but let's jump around to some of those FANG stocks. Amazon on their Prime Day, up 1.9% for Amazon. Let's see, what do they say? First day of Prime Day was the biggest sales day ever. Some of the headlines they got up there. Shoppers bought 375 million items worldwide over the 2 days of events. $2.5 billion saved on deals. $2.5 billion saved. The Prime Day is also the biggest ever for independent sellers. Yeah, you talk about an acceleration, man. I'm sure they're going to be, what else do they have? Yeah, 375. So those are the cherry pick numbers that are out there already. Largest sales day in the history of the company. Is that by revenue? It's interesting. You always want to watch words people use, right? And I'm just cherry picking a couple news releases here up on the Thinkorswim platform that they have their news. Let's see what they got. Members purchased more than 375 million items worldwide and saved more than $2.5 billion on millions of deals. The largest sales day in company history. Over the course of, now I wonder what they mean. Was that most items? The largest sales day. They don't say it was the most revenue taken in on any day, right? Maybe it's the largest sales day. Maybe people saved the most money on that day, according to Amazon. I'm not sure. Either way, they're cherry picking some numbers, and either way, it is a lot of numbers. 375 million items in 48 hours. Imagine building a business where you need to process 400 million items being sold, packaged, boxed, shipped, stored in your account, etc. 400 million items almost over a period of 48 hours. Amazon, they're up 2.3% as this market catches a bit on the open. We back it up to Apple. Apple shares basically flat at 190 so far. Let's put it back to a 15-minute to get some context here. We jump over to Tesla shares. Tesla shares basically positive 0.7. We jump over to Delta on their numbers. They give up some of that gain, still up 2.7%. Pepsi had their numbers, strong numbers as Kevin referenced, up by 1%. They give it up as well, though. Interesting. Expectations high. They give it up. And let's talk a little bit about Disney. So Disney's up 0.5%. They give it up as well. And this should be some encouraging news if you're an owner of Disney. Surprised it didn't spike a little bit higher. And I'm going to jump around a bit. Is that not it? Oh, there was a good picture I had up here of Iger. Where is he? Is it at the top? Maybe I cycle through them. Disney. All right, I'll find it. It was probably up here in the video. Oh, there it is. I was saying, he's looking good there, man. Now, I'm a Disney shareholder. I know I'm biased, okay, but he's at the helm again. That is him, 2 days ago, walking in style at the Sun Valley, Idaho, Sun Valley Conference. Allen and Company, Sun Valley Conference a couple days ago. Iger, he's looking good, man. He is. And he's making a lot of sense, man. You think about it, right? I was thinking about this the other day, actually, because I turned on ABC, and in my head I said, that's right, Disney still owns ABC. Like, why do they own ABC? Why does Disney own ABC right now? They're not getting any revenue on Disney Plus. It just seemed like, and what do they say they talk about? Yeah, he pretty much says, companies facing a lot of challenges, some of them self-inflicted. When he comes back, I may sneeze again, folks. I told you they're getting me. Disney is going to be expansive in its thinking about traditional TV business, leaving the door open to possible sale of the networks. They may not be core to Disney. I don't think ABC is core to Disney, man. I don't think it is at all. They have FX in there as well. FX completely not core of what Disney's doing. That's just another TV network, as you could say that they are basically in the process of getting away from traditional TV. So if you're in the process of getting away from traditional TV, right? Because they even talk in here that at some point, what's going to happen with ESPN, right, et cetera. In an interview, he's talking about legacy TV networks, including ABC and FX, may not be core to Disney and could be unloaded as traditional television models continue to upend streaming. If you look at the numbers they're losing, folks, now ESPN is the one that they're trying to hold off on because they make an obscene amount of money for every person that's a cable subscriber in the U.S. But FX makes 0 cents. ABC probably makes 0 cents. They have a great ABC News division, of course, are probably not core to their business, man. Their business is going to be what? It's going to be movies. It's going to be Disney Plus. And it's going to be ESPN in some capacity. And how that works is to be figured out. He might lease that out. I think they talked about here. I was jumping around different ones. Let's see what they talk about. Yeah, strategic partner, okay? So ESPN, on that front, not just unloading it, okay? They're talking about finding a strategic partner which could take the form of a joint venture or offloading an ownership stake. So not entirely ditching that because it's probably such a hot traditional equity to own. When he left the company, he had predicted the future of traditional TV and had been very pessimistic, and has found since his return that he was right in his thinking, adding it's worse than he expected, right? People are just leaving, man. It's happening. There's enough packages out there. I mean, Warner Brothers Discovery, their new package with Max Plus or whatever it's going to be, that's going to have what? You're going to have like the Learning Channel in there. You're going to have A&E or some other networks. There are plenty of packages, man, where you don't need to be paying for the 60 to 70 to 80 channel traditional cable TV lineup anymore. And I think that's happening faster than we all realize. And so I think you're going to see some of those plans get laid out sooner than we may have anticipated. Yeah, traditional TV, Duffy says, our man in the den is good for local news. That's it. And I would agree to a certain degree. But my take on local news, man, is that local news is just not a very uplifting experience, is my take. And listen, you got to stay local. You got to stay in tune what's going on. But unfortunately, it's just many bad stories that happen in the localities, which is a bummer, man, most of the time. Feel like I'm biased. I live in Florida, so Florida local news sometimes is pretty exceptional, as we all know nationwide. But yeah, nonetheless, overall, just kind of a lot of fluff, and get my weather there is what I like on my local news. That's about it, realistically. All right, what else we got? How about crypto as we jump into this break right now? What do we got? We coming into this break? Yeah, we got about a minute. We jump over to Bitcoin. So you got Celsius. Bitcoin right now, you can't hold Bitcoin down. 30,000. I read an article yesterday, I think it was in the Journal, somebody talking about maybe you see 120,000 by the end of 2024. Bitcoin, you have the ex-Celsius CEO getting arrested. Just be careful, folks. You know, it shouldn't have taken a collapse for these people to get arrested if they were doing things that were illegal on the outside looking in. It seems easy. But yeah, if you're investing in crypto, realize if anybody else is holding your money, you really don't know what they're doing with it. It's unregulated industries, most of them foreign, most of them not in America. And yeah, we'll see how this all plays out. All right, folks, one more. Oh, no, we got two more segments. Yeah, we're coming back at 40 past. Stay tuned. We got markets up. S&P's up 23. We'll talk some more equities. We'll take a look at those banks with their numbers tomorrow morning.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com. TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets in positive territory. S&P is up 23 right now. We got the NASDAQ 100 up more than 1%. The Dow, a little bit of a laggard right now, up 76. Russell lagging a bit, up by 4. We jump to some of the banks. Citi with their numbers tomorrow morning. Okay, now, if you don't use Thinkorswim, folks, Thinkorswim, TD Ameritrade, they are a sponsor. I know I'm biased. It comes with it, but I say it all the time. I would tell people, especially if you trade options in any capacity, okay, but the platform itself, Thinkorswim, the active trader subsidiary of TD Ameritrade. If you're unfamiliar with this number, it's the market maker expected move. Okay, it appears anytime an event is coming up. In this case, all you really need to know is that this is what is being priced in for a move on their earnings. Now, what you can see here is that the ones that expire tomorrow, okay, because this earnings event happens tomorrow morning, but really, when you have an event taking place on a Friday, okay, you can just go out to the options that expire on a Friday. So you're looking at about a $1.70 move in a $47 stock is the implied volatility in either direction. So you're talking about what? Under 4% move in either direction for Citi. They have their numbers tomorrow, okay? We jump to Wells Fargo. Their numbers tomorrow as well, pretty similar, $1.43 for a $43 stock. You got JP Morgan with their numbers as well. Pretty similar as well, $4, right, for a $147 stock. Percentage-wise, yeah, I mean, Wells Fargo, you're at like 3%, right, as I was going back. So JP Morgan, you're looking at about a $4 move in either direction. JP Morgan today, basically flat, coming into their numbers tomorrow. We jump over to Wells Fargo right now, up a bit. Citi right now, down a bit. Now, the other banks, in terms of Bank of America, I think they're at Tuesday, potentially, next Tuesday. Is that right? The 18th? Yeah. So Bank of America is next Tuesday, the 18th. And then you get Goldman Sachs is Wednesday. Morgan Stanley is Tuesday. So Bank of America and Morgan Stanley on Tuesday of next week. Goldman Sachs on Wednesday, among some others as well. We jump back to Delta and Pepsi with their numbers today so far. You got Delta shares. They give almost it all back. Look at that. Delta up 1.2%, basically up with the market this morning. You got Pepsi shares. They almost give it back as well, up by 1.5% right now. You got the market up 0.5%. That's giving both of those a bid as well. So, yeah, Amazon. We'll jump to Amazon. Amazon's up about 2%. Always interesting that the market reacts to these anecdotal announcements, up 2.1%. Okay, you already gave up $1 from the spike high, though. And listen, I'm a bull on Amazon in the long term. Okay, I have Amazon in a retirement account. But this seems like quite a promotional puff piece when you look at how they phrase what's going on here in terms of this numbers. I was looking at it again. Okay, they said shoppers purchased more than 375 million items during the two-day sale. Okay. And the headline even here, right, on Bloomberg, Amazon shares jumped 2% after reporting record Prime Day sales. Everybody would take that to mean that they sold more that day than they ever have prior, or at least on Prime Day or something. But it doesn't. What they're talking about in here, and they continually say, and even here they mention it, Amazon does not break out the financial metrics of its biggest sales, instead releasing mostly an anecdotal information about top sellers. And you have Adobe that's scheduled to release their tally of total U.S. online sales later this morning. Nonetheless, I'd be careful. I mean, they're talking about in there saying, more money was saved this year than ever before. Well, that doesn't mean anything in terms of how many products you actually sold. Now, listen, this market is strong like bull, man. So if it's strong like bull, Amazon's going to be strong like bull. But surprising you get a 2.3% lift there when I feel like that's some cherry-picked data that doesn't really mean anything if you know how to interpret words that people are using, right? Now, you look at some of the articles yesterday, okay? I think this was yesterday, yeah. Amazon Prime Day pushes U.S. online sales up 6% in the first 24 hours. I mean, amazing you put the number that higher. Consumers spent $6.4 billion online in the first 24 hours of Prime Day. That's up 6% from a year ago, but fell short of the estimates for even stronger growth as shoppers hunt for bargains. So a little bit of a miss there, and it'll be interesting to see what they come out with for those final numbers, if for Adobe at least, and how they look at those numbers. It seems like if they really had a strong day, they could have come out with more than that cherry-picked anecdotal data. So we'll leave it at that. All right, we talked about the banks. We talked about Amazon. What else do we got pulled up here? Let's see what we got pulled up. We talked about Amazon. We talked about Celsius as well. Disney, PPI. And the banks really kicking things off. Now, this is interesting. This is out here from Bloomberg this morning. And it's kind of what I was talking about on the inflation front, talking to our man Kevin Hinks about a bit. We just got a print of 3% CPI, right? You look at the core, we're much higher, 4.8 or something like that. In the past, a 3% print would have sent plenty of alarm bells ringing, okay? So keep that in context, because it's, compared to 8 or 9%, yeah, we're almost out of the woods. But normally, if you see a number of economic numbers like 3% coming out of the woodwork, right, things get very wary in terms of what that may mean. Now, you look at this chart, man, okay? The headline is in black here. You talk about tanking. The core number, we've never seen in a generation the core do this, because every time we've had CPI spikes like this, it's always had to do with, most of the time, crude spikes, most of the time having to do with war in terms of the Gulf crisis, etc. Huge CPI spikes, most of that having to do with headline numbers with energy. This time we had a core problem. Tough to deny that is not going to lower prices, but we're still at 4.8%, folks, okay? We've had a couple dips. I mean, look at the dip we had almost a year ago, right? You had lower prints on a core perspective for 1, 2, 3, 4 months. Nonetheless, what do they make the case here for? And this is chief economist at Oxford Economics, Ryan Sweet. But just give this verbiage, give this thinking a chance, because it'll be interesting to see what happens with yields over the next 2 weeks. The new data could give the Fed reason to debate whether any further rate hikes after this month are needed. Okay, this tightening cycle by the Fed is likely coming to an end. So we'll see where the rates go over the next couple of weeks, and we'll see what the chairman says. You're going to get 2 full months of data. Remember, 2 full months of data. That's going to decide it. No matter what the chairman says, we are going to get 2 full months of data before we get a September meeting coming up. I think it's like September 20th. Something like that, late into September. So you're going to get all of July, all of August. You're going to get an entire earnings cycle. And boy, just remember how quickly things can change from 3 months ago, right? Think about it. I'm talking about late September. That's 2.5 months from now. We're not that far removed from the banking crisis. A little bit longer than that, but it puts things in context slightly. Interesting, nonetheless. We do live in interesting times, as they say, right? S&P's up 22, man. Let's check in on the dollar index. Oh, we got a 99 print. There you go. 99,996 on the dollar. And you know what? Let me see what my friend sent me, because I was riding him a little bit that I got 110. Yeah, he said, it's a mess. The dollar is trash. That's what he said. And he lives in Switzerland. He's having his wedding over in Spain. Yeah, but nonetheless, man, dollar. Look at that, right? Dollar at 100. What do we got the euro at? Euro's probably above 112 right now. Just pushing that level. 111.93 in the euro. Lower dollar, lower yields, higher market. One more segment, folks. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up 25 points right now, continuing. Put it on a 5-minute chart. You see it continuing to make higher highs right now. S&Ps up by more than 0.5%. NASDAQ 100, you're up by 1.1% right now. Let's check in on some of those FANG stocks again. Amazon up 2.3% following their Prime Day. Apple up 0.5% right now. Microsoft up 1.2%. There's a bid for you. Google shares up 3.1% for you, man. Watch out in this market. Remarkable. We jump over to NVIDIA. NVIDIA up 2.2%. They'll be talking about NVIDIA coming up on Fast Market at 12 today, as Kevin mentioned. They'll be talking some of the banks with their numbers out tomorrow. Wells Fargo out with their numbers up a bit. JP Morgan out with their numbers up a bit as well. Citi, the other bank, they're flat this morning at 47.36. We keep our eye on the dollar as we got a 99 handle on the dollar index, man. We got a weaker dollar. Why do we have a weaker dollar? Because we got lower yields, so people don't need dollars to chase yields. They're kind of related, one or the other. It's the chicken and egg, but nonetheless, lower yields, weaker dollar, higher market, and we got a Fed meeting in 13 days where they're expected to hike yet again. Compare all that, right? Compare all of that. Compare yields are plummeting, the dollar's weakening, the Fed is going to hike again, next month to bring us to what? Almost 5.5%. It's just an amazing economy when you look about it in that perspective. We jump over to the VIX. Lower prices on the VIX, 1330, as nothing seems to be able to get in the way of this market. And what else, folks? We got to talk a little bit of poker to wrap up the show. I've been talking about the World Series. So today will actually be technically day, quote-unquote, 7, even though they've had to play 4-day 1s, 2-day 2s. Finally, they combined on day 3 altogether. But technically, this is the 7th day of the tournament. There's 49 people left. That's your leader, Joshua Payne. Now, it's always interesting, the cool part. You got some pros in the field still. You got a few big-name pros. You got many pros, because a lot of people that do play it are pros. They might not be name pros. But this guy up top right now, $28,000 is all he's got in his cashing career. And, boy, they're guaranteed well over that now. And you are playing for the payouts. $12.1 million for the top payout there is what they'll be looking for. And they are already guaranteed $188,000 at 49th place, playing down. Thanks for tuning in, folks. Stay tuned. Basil Chapman's up next. Live programming after that. I'll talk to you tomorrow on Friday. Have a great Thursday. Stay tuned for Basil, folks. Have a great one.